Cheers, everyone. Today is a very special day for me. I'm celebrating my 40th anniversary in financial services business. It was March 30th of 1986 when I got my first license for the business. I'm still sort of working, although I'm retired. I'm enjoying vacation right now in Panama City. I'm on the rooftop of a building enjoying the good weather. I still want to share with you some experiences over my 40 years. And there's so many that I can't fit them all in one video. So I will spread them out over five different videos. Let me show you how I'm going to do this. In video number one, which is today, is in this same video, I'm going to share with you what happened in 2015. If you remember, in 2015, we were dealing with a lot of problems about retirement, and the government made changes to the government pensions. We will analyze that. In video number two, we'll talk about the average CPP plus the average RRSP. Actually, a couple of weeks ago, the Global Mail published an article regarding the average RRSP in Canada, and I compared to the average CPP and ran some numbers and see what happens. And what happens for the average senior is a big problem. That I will share with you in video number two. In video number three, why early withdrawals matter so much. And this, in a way, is how to solve the big problem of video number two. This is going to happen in the next 2, 3 weeks. To video number four, I will move to the higher income seniors. What happens when you retire with an income high enough to claw back the old age security? But this is another problem because what happens is while you are on during your working days, your working life, you're earning above average income, paying a high income tax rate, which motivates you to save in the RSPs. But then, if retirement, your old age security will be clawed back, so your tax rate will be outrageous, and you need to do this. And in video number five, I will share a new personal retirement income calculator that I'm working on. It's ready. I already use it for a couple of clients. Clients are very, very happy with it. I had many times I had said in my office clients that they retire, and I told them, well, based on your withdrawals, your money is going to last so many years up to age 85 or age 90, and then a couple of years later they come by the office and they said, well, Ruben, what happens if I withdraw more money from my reef? So how long is going to last? Well, with this new calculator, you will be in control. You will plug in the numbers in the way I tell you, and it's going to be very easy to figure that out. Anyway, let's see what happened in 2025 and why it didn't fix retirement in Canada in the way it was expected. Back then, there were two big concerns. Number one, it was the Canadians weren't saving enough. The government kept on saying, and financial institutions as well, keep on saying that Canadians are not saving enough, and many retirees were at risk of running out of money during their lifetime. So the government made two promises, and one, the first promise was to keep the old age security at age 65. If you remember, the old age security was going to be moved to age 67, to start at age 67, but they promised to keep it at age 65, and they did so. So that's okay. They honor their promise. And they honor the second promise as well, because they promised to enhance the Canada Pension Plan. In 2015, the Canada Pension Plan was originally designed to replace 25% of your average lifetime income. So what they say is that lower income Canadians, they didn't have enough to retire. So in order to ensure that, they want to move that 25% to one third, or 33.33% of the average lifetime income. And they did so between 2015 and 2019. By 2019, they started it, and by 2025, it was completed. So now what happens is we are paying more into Canada Pension Plan. We're making bigger contributions, meaning we're paying, technically, many people see it this way, paying more tax. We're not paying more tax, we're paying into Canada Pension Plan more in order to receive more when we retire. But does it work? Well, let's take a look. Let's see if it works or not. Now in 2025, 2026, an average lifetime income adjusted to inflation is give or take $40,000. If we take $40,000 and we take 25% under the old system, that will be $833 per month, which is an average amount for the Canada Pension Plan benefit, the monthly benefit for 2026. But if we take the new system, which is not fully implemented yet, it's going to take a few years until we make sufficient contributions. If we take the new system of 33.33%, replacing that, that will be $1,111. So instead of receiving $833 per month in average, we will receive in the future $1,111 from Canada Pension Plan. And so far in paper, it looks good. So let's compare both of them and see the big picture, see the whole thing. So here we go. See, if we CPP under the 25% schedule like we had before, the 25% system, we would have received $833. Under the new system, $1,111. Now we're gaining $277.67. So we contribute more, we get $277 more in average in the future. It fell. Sounds good. But we also have all-day security. And all-day security doesn't change. All-day security keeps on starting at age 65. And if you're retired and receive full all-day security, meaning that you have 40 years or more of residency in Canada between the age of 18 and 65, you will have received $742, and it's not dependent on how much you receive from Canada Pension Plan. But lower income Canadians typically are eligible to receive guaranteed income supplement. And guaranteed income supplement is based on other income. So the higher other income you have, the lower the guaranteed income supplement. And Canada Pension Plan is considered other income. So your guaranteed income supplement, if you're eligible for it, if you don't have any other savings other than Canada Pension Plan and all the security, so under the 25% schedule, you will receive in January, February, or March of 2026, $526. But if you throw in the $1,111 per month, so now it gets reduced to $382, so losing $144. So in essence, what happens? Why it didn't work? Because you're contributing more to Canada Pension Plan if you are, and if you happen to be a lower income Canadian, you're going to get more CPP, less GIS. You're contributing in this case to get $277 more of pension, and in reality, you end up getting only $132 because you're losing 144 on the GIS side. So it's just a thought that I want to share with you because I want to share everything that it seems to be good, and at the end of the day, it's not as good as it seems to be. And, uh, and in the next video, I will show you, as I said, on the upcoming videos, what the average CPP and the average RRSP, how they represent a big problem, which is kind of the same system, the same thing by adding a Canada Pension Plan. I will show you this on detail. And then how to solve the problem. How do you solve this problem? Well, by making early withdrawals from RRSP. I will show you in this other video why early RRSP withdrawals matter so much. And well, they're not as bad as many people think. A lot of people think, so I want to keep my RRSPs until I don't want to withdraw my RRSPs until age 71 or 72, convert to a RIF. Well, many times, actually, 8 out of 10 times, that's not the case. So it's very important to learn how to withdraw RRSP money beforehand and how to try to save as much as you can in taxes. I will share with you all that on this video. And then also, if you happen to be on the other end of the income spectrum, if you have to happen to be on a high income, high enough to claw back the all-day security, so what the tax rate is going to be on your RIF withdrawals, and it's going to be outrageous. I have people coming to my office that they retire and say, "Ruben, look what happens. I have a defined benefit pension plan large enough to claw back the old age security, and now withdrawing that RRSP money, and I'm paying 50% and more on the RRSP on the RIF withdrawals." I say, "Well, I'm sorry, there's not much that you can do now because this has to be taken care before retirement." And then, as I said before, as I mentioned before, the new personal retirement income calculator that I'm working on. I'm just polishing the last details of the calculator, and that will be introduced in the next few weeks. So make sure that you subscribe to the channel. If you're not subscribed yet, hit the little bell to be notified when I upload the following videos. On the descriptions below the video, you will find my contact information. If you have questions, drop me an email. I promise I reply to emails within 24 hours. And other than that, thank you for watching. I have a wonderful day.